I think the West is starting to lose price control, and I think that's a problem that's going to get worse for them. What we're seeing, with the flow of gold into the COMEX, et cetera, is people are now starting to figure out, sophisticated buyers, sovereign wealth funds, family offices, central banks. Hey, we got to get a hold of our gold, because otherwise, we're not sure if it's really there.
This is Little by Little with Andy Schectman.
Welcome back, everybody, to another episode of Little by Little. I'm very psyched to have with me Dave Kranzler. Dave's someone I've known for a very, very long time, almost 20 years, and he, of course, is the proprietor of Investment Research Dynamics and the author of the Mining Share and the Short Sellers Journal. Dave, it's an honor to have you back. How are you, brother?
I'm well, thanks. How are you doing? Thanks for having me on.
I should say, back because I've talked to you so many times, but here for the first time, and it's an honor to have you here. I follow everything you do on X and have known you for a very long time, which is one of the things I wanted to talk about. We go back all the way to the days of Ranting Andy Hoffman, and who used to write my newsletter. And, there are very few of us who have been around. I know that you've been around since 2001 in this industry. Which is an eternity, for most people in the space. You're one of the old timers. I've been selling gold at Miles Franklin since 1989, and there are very few of us who have had the longevity in this industry and have learned to deal with the ups and the downs. I guess the first question I'd like to ask you is, what drew you to this world and sparked your interest in gold and silver? And you've hung on for a long time. Do you still believe as much today as you did way back when?
I got to tell you, the last 24 years have been an exercise in survival. But I mean, in the boom times, you make a lot of money, and if you don't take at least some of it off the table, then that's your own bad, right? So I was working as a junk bond trader in the 1990s on Wall Street, and had decided, I got tired of New York City. There's a love-hate relationship that you have with New York City, and the hate started to outweigh the love. And I was like, you know what? I'm going back to God's country in Colorado, which is where I'm from. And for about, I don't know, at least at the end of the tech bubble, I started shorting tech stocks. That would have been, 1999, because that's when I transitioned out of Wall Street. And I was in a trading chat room with a guy, and this was in like mid-2000, and he was urging me to take a look at gold and silver and mining stocks. And I'm like, no, that's not really my thing. I'm doing well shorting tech stocks. And we became friendly, and eventually he convinced me to start taking a look, and that was in the spring of 2001. And I was like, this actually looks like a pretty good value proposition. And then I just started immersing myself in everything that you could read. Back then, James Dines had a newsletter. I subscribed to that. He was able to get a hold of free copies of Jim Willie's newsletter, which, I kind of figured out right away was, if you, reduce it to about 30% of it, that's where the truth is and what he has to say. And there was, a handful of other newsletters that I subscribed to. I immersed myself in all the, everything that you could read about, which inevitably takes you over to the dark side, right? Oh geez, look what's really going on behind the scenes in the system, with the money printing, increase in federal debt, the, accounting fraud in corporate America. I mean, Enron I was short Enron when it blew up. And my buddy and I were short Kodak when it blew up, because we're looking at this thing. And it's like, this thing's just, it's a viper's nest of debt, and there's probably off-balance sheet derivatives that it has exposure to. So And so I basically jumped in head first, and ever since then, I haven't looked back. And I mean, to be honest, it is powerful as the fundamentals that. So I look at it as the secular rally in the precious metals started in 2001, right? Bottomed out in 2000, and the secular, meaning long term, bull market in the metals started in 2001, and then we've had obviously bull cycles and a couple bear cycles in there. So, but as I started really analyzing the fundamentals and analyzing, and understanding junk bond credit as a trader, that really helped me understand, what was going on, corporate America's balance sheet, the government's balance sheet, et cetera. And I was like, the housing bubble is blowing up. A housing bubble is being blown. A credit market bubble is being blown. Stocks started, a stock bubble started blowing, inflating. And I was like, this thing's going to crash at some point. And then we had 2008. And I thought that was going to be where we'd have some type of monetary system reset. And obviously, I didn't expect the Fed to print as much money as it did. And that's what kicked the can down the road. So, I mean, fast forward to now, I mean, the same fundamental backdrop that you had in the early 2000s and that you had leading up to 2020, because that was essentially, basically, a financial systemic collapse that the Fed saved again with money printing. And now it's even worse. I mean, in my mind, what we're looking at here potentially is what happened in 2008 times 5, maybe 10. And so, in my view, the fundamentals that justify significantly higher prices in gold and silver, and obviously the mining stocks will follow that, are even stronger now than they were when I jumped into the sector. And that's what's kept me going.
I respect that very much. There are very few people who can stand on their own and to trust their gut for a long period of time. When everyone around you questions what you're doing and your beliefs, it certainly appears as though you've been right, and it's increasing to that point. You mentioned the mining shares. I'll jump ahead to a question I have on the mining shares. It appears as though they're finally starting to catch a bid, but they still look massively undervalued compared to gold itself. With oil prices dropping in particular and the all-in sustaining costs coming down, when does the broader market wake up?
That's a great question. It's a $64,000 question. I think it's starting to an extent. I mean, for the last couple of years, I know that like private equity funds, there's a segment of private equity funds that have started investing in mining stocks. They're buying new issues, and I get this color from all the companies that I talk to, that the juniors that have to raise capital, and there's slowly trickling in some non-core. When I say non-core, guys like you and I who have just stuck through the thick and thin. There's some newer funds that are starting to participate in the sector. But what I think it's going to really take, and we saw this a little bit when the market fell off a cliff 2 weeks ago or a week and a half ago, whatever it was, and the mining stocks and gold and silver kept going higher. I think what's going to have to happen is you're probably going to have essentially the tech bubble is going to have to really pop, and it's started to pop, but all of a sudden, clearly there's still enough money on the sidelines to keep it going. I know that I think it was 2 Thursdays ago when the market was falling off a cliff, and retail investors threw $4.8 billion just that day into the stock market. It was either a record one-day high or the second highest all-time high day for retail money going in. And so that tells me that people, and it's probably the same with mutual funds, are buying the dip if they've got cash to do it. And at some point they're going to run out of cash, and the market's going to crash for real. And stocks like NVIDIA are I actually think NVIDIA ultimately, for a lot of reasons, not just the fact that it's insanely overvalued and the industry, is starting to face headwinds with overcapacity in data centers. I think NVIDIA is going to get cut at least in half. But when that happens, I think you'll see the broader investing public, general mutual funds and things like that. They're going to sell dump tech. They're going to say, well, what do we do now? And they'll look around and they'll see what a value proposition mining stocks are. Because as you pointed out, they're lagging gold and silver. If you just measure it by, the GDX to the price of gold ratio, it's lagging badly. And if you look at it in terms of either, I use the ARCA Gold Bug Index, the Huey, used to be called the Amex Gold Bug Index, because GDX wasn't around until 2006. But you can take the Huey all the way, well, you can take it back further, but I take it back to 2000, and you run the ratio of the Huey to the S&P 500, and that ratio. Mining stocks were more undervalued relative to the S&P back then, but not by much. And I think maybe just a couple years ago, they might have been undervalued versus the stock market by just a little bit. But we're among the most undervalued relative to the general stock market as we've been in the entire secular bull market.
Yeah, and then I find it crazy that gold is run the way that it has and the mining shares haven't. And certainly that's kind of unusual. I mean, I remember many instances where the mining shares were running ahead of the price of gold. I think there's a lot to look forward there, and certainly people could do worse than by subscribing to your mining share and your short sellers journal where you focus on the mining shares. This is the time to be looking at it.
Thanks, I appreciate that. Just to add a little bit to that, you're right. But the problem is, what I've observed is that when the mining stocks lead the metals, it tends to be a low quality bull move, and it's short lived. So if you look at like 20, when the bear market ended at the end of 2015, the 4-year bear market or whatever, the mining stocks, they just took off like a bat out of hell. And some of the juniors, went up 5 to 10 times. It was crazy. But that rally only lasted 8 months. Yeah, January to August. And then the same thing in 2020. All the hot money flew into the mining stocks, and that rally petered out in August. That was a 6-month rally. But if you look at the start of the secular bull market, 2001, 2002, and you look at, the end of 2008 to 2011, those two periods, what happened is that gold led for a while, and then silver started catching up to gold slowly, and then the larger cap mining stocks started to move, and then after that, and they lagged, the juniors, especially the riskiest ones, really started to pop. And that was, that cycle really kind of lasted until, I don't know, probably May 2006 or even into 2007 before, everything dove into 2008, late 2008. So my point here is that I think what we're seeing, and actually, a lot of the largest cap stocks have done. If you look at Agnico Eagle, it's had incredible performance. But most of the sector, you're right, has lagged badly. And in my mind, the fact that silver's lacking gold and gold is leading everything, to me, that tells me we've got a serious, high quality move ahead of us that's going to last at least a couple years.
Well, that's exciting. And for people who don't own mining shares but own physical, understand that the potential that you have in mining shares, in my mind, is exponentially greater than in the physicals. And I think it's important for people to have a little bit of exposure, certainly to mining shares, if you've been in the metal and let it run this far, at least in gold, to not have some exposure, some quality mining shares like the majors or the royalty stocks is a mistake. Sign up for Dave's newsletter. And this is an opportunity that doesn't come around very often, in particular when you talk about this particular setup, which you've seen before, which I would agree would seem to signal great value for the mining shares. Let's shift gears just a tad bit. Something I've focused on a lot, I've seen you comment on as well and cover, and that is the deliveries into COMEX and the dwindling inventories at the LBMA. What do you think that signals, Dave? Is someone cornering the physical market or attacking the LBMA, or is it just simple as tariffs and arbitrage? Is it something bigger or not?
That's a great question. And as you know, the central banks keep the movement of physical gold as opaque as possible. They don't want anyone to know what's going on if they can help it. Part of it's probably an arbitrage, right? Short gold in London, so the spot price in London, and buy futures in New York. But I mean, the COMEX has never really been a delivery market, right? I mean, gold and silver get delivered, but it almost never leaves the vaults, if it's even there to leave the vaults. I don't want to get too deep into the weeds here, but I mean, after chatting with a handful of people, I think, and again, I don't know, but I think what may be going on is, and obviously, as you know, especially Eastern Hemisphere buyers, a lot of big buyers of physical gold are now demanding repatriation rather than just buying it and leaving it in the London vault or buying it and leaving it in the COMEX vault. They want it out and they want it delivered to the homeland where they can watch it and be sure it's there. And I think that's been going on. I mean, there's more gold moving into the COMEX than has been moving out, but a lot more has been taken out of the COMEX than we've seen historically. So I think that's part of it. And I think what's going on is I think the bullion banks that operate the COMEX, JP Morgan, etc., if they got caught short on physical bars that they've hypothecated or they've leased out, and we know that goes on. That's elite gold leasing is an official thing. But so is hypothecation. JP Morgan got in hot water for hypothecating silver when MF Global blew up, if you remember that. And so I think what the bullion banks are on the COMEX are doing are covering their synthetic short in the bars in case all of a sudden, they get a tap on the shoulder from a Eastern Hemisphere sovereign or wealth fund who says, why don't you go ahead? We'll send a plane to get it. Why don't you go ahead and ship us our bars? And I think that's a big part of it that's going on. And then there's also the theory. I mean, notice how Trump was beating his chest about auditing Fort Knox. And, that was a month ago. And then I haven't heard a peep about it for the last couple of weeks because someone behind the scenes told him to shut up. And I think there's an outside chance, not even an outside chance. I think there's a strong possibility that the Fed may be restocking the gold bars that are supposed to be sitting in the vaults that hold the Treasury's gold. So, and I find it interesting that he's willing to take a look into Fort Knox, which obviously is not because it hasn't happened. But why don't we also take a look and see what's going on in the Denver Mint, where also part of the Treasury gold is supposedly stored, and in the deep storage vaults at West Point.
Yeah, that's right. And most people think all the gold is held at Fort Knox. I think it's only about 40%, to your point. And also to your point, it always bothered me that JP Morgan was allowed to be the custodian of SLV after paying a $920 million fine to the Justice Department for manipulating the metals market. And even crazier, and maybe treading that line of conspiracy and reality, where does JP Morgan fit in all of this? They've now become the primary custodian of GLD, which again, you want to talk about the foxcar in the henhouse. So let's pull on that string just a tad bit more. You've been a big voice in talking about gold and silver price suppression and very logical. And you kind of tread the line there, right there. You don't want to seem like you're conspiratorial, but I think there's a fine line. between what is reality and what is conspiracy. With the deliveries at the LBMA going from T+1 to T+8 weeks, T+1 day is what it's supposed to be. Trade is T+1 settlement. The third day the metal should be moving. Well, it's 8 weeks now, Dave. Sorry, you're not going to get your bar because there's a shortage of trucks here at the Bank of England and manpower. Does that signal to you the breaking, maybe, as you were talking about with the bullion banks, this existential threat of being short and the tap on the shoulder? Could it be maybe finally, we've all talked about it forever, could it be the breaking of the gold and silver price suppression and the point where the paper game is over in favor of the real thing? Are we almost there or not? Tough question, I know.
I mean, you know, as you point out, it's a tough question. I mean, you can never know for sure because everything, again, you know, is kept opaque. All you can do is examine the footprints in the snow and see where they lead, and they always seem to lead to the same place, right? And I think we are transitioning into an era where price control is taken out of the hands of the Western central banks and the BIS. I mean, interestingly, there's a guy, Robert Lamborn. He's a consultant for GATA, and he studies the BIS financial statements and studies the institution itself more closely than anyone I'm aware of. And every month he reports on the level of gold swaps the BIS does, which the BIS has its own stock of 400-ounce bars. When there's liquidity issues on the LBMA, they do a swap that gives the bullion banks access to their 400-ounce bars so that they can deliver them to China or send them to a Swiss refinery where they're refined into kilo bars and shipped to India. Because, you know, if India and China and those other Eastern Hemisphere central banks want their gold, you have to give it to them. And if you say no, the whole world will know, and then the gig is really up, right? Well, the level of swaps at the end of 2024, they had, it was, I don't remember, something like, I forget the notional amount, but let's just say 500,000 units of swaps outstanding. And it's down to under 100 now. And I have a feeling that, and obviously that's in the face of what we know is a growing shortage of available bars that are deliverable into entities that want to take physical possession of them. I believe what's possibly happening is the BIS is looking at this and said, we got to pull back on our swaps because otherwise we might not get our gold bars back. And that's just my theory. I can't prove it, obviously, because everything's kept opaque. But
no, man, it makes a lot of sense, Dave. When you have 36 million ounce float standing behind 280 million ounces in spot contracts, that's probably wise to get the real thing before, like you say, this becomes a problem. Well,
to answer your question, I think the West is starting to lose price control, and I think that's a problem that's going to get worse for them. And especially given that, I mean, you've had really over 3 years of these Eastern Hemisphere entities that have been taking delivery of their gold and then taking possession of it. And that's, you know, it's a war of erosion on the LBMA. And so again, I think what we're seeing, you know, with the flow of gold into the COMEX, et cetera, is people are now starting to figure out, you know, sophisticated buyers, sovereign wealth funds, family offices, central banks. Hey, we got to get a hold of our gold because otherwise, you know, we're not sure if it's really there. And in fact, I just saw last week it was reported that Germany's once again thinking about repatriating the rest of its gold that's held by the Fed.
As they should. It took them 3-4 years to get it the first time, and the bar numbers were different than what they had sent. It's all about trust, which leads me again, and again, you don't disappoint. You answer in a very political way, yet with great honesty, and I appreciate that. With all of what you've just said, along with, for example, the BIS, who you mentioned, reclassifying gold as a Tier 1 reserve asset next to U.S. Treasuries, the only other one, in essence. Judy Shelton, who I interviewed, who told me carte blanche, Andy, after all of my discussions, and for those who don't know who Judy is, she was Trump's nominee to run the Fed in 2016. Some think she'll take over for Powell this time. And she wrote a book, As Good as Gold, where she advocates for 50-year treasuries and shorter duration later on, but starting with 50-year treasuries pegged to and redeemable in gold, and then stable coins issued off of those. She said to me, Andy, Trump will issue them according to what he's told me. And my belief is that she said he'll issue them July 4th, 2026, the 250th year anniversary of the United States. So you hear that from Judy. You look at the fact we've become net importer of the only other tier one. You see all the gold coming here and being delivered to who? When JP Morgan delivers $4 billion in gold in the March contract for a client, who is said client? So my point with all of this is, with what Judy says, with the tier one, with the central banks repatriating, with the central banks buying, all of that stuff, if you're being honest with yourself, do you ever see, whether it be the West or the East, attempting to re-anchor gold at some point to some sort of, whether it be a common currency here in the West, a currency, or a common settlement currency in the BRICS, like we were told by Dilma Rousseff, the former president of Brazil and the head of the New Development Bank for the BRICS, that yes, they've agreed in principle to the unit, which is a settlement currency pegged to and redeemable, 40% pegged to and redeemable in gold by central banks. Do you see at some point, are all of these things that we're seeing and have seen over this long journey of ours, do you see gold being re-anchored to a system?
Again, I think the monetary system is transitioning into that type of reset. And, I don't know what exactly it'll look like. Probably it'll look like the BRICS, how the BRICS are envisioning it. I don't know how hard the U.S. will fight it, or if they'll just throw in the towel. I mean, they're going to fight. I think the U.S. will fight as hard as it can to maintain the dollar as the reserve currency, because that's what gives the politicians their power, right? So I don't. To me, that's probably the biggest impediment to a whole entire global monetary system reset. And I also think that if it's done correctly, there has to be a system of accountability. So, let's say China all of a sudden says, hey, you know what? Our currency's backed by gold now. Feel free to trade with us if your currency's backed by gold. And the U.S. says, oh, well, look, our ledger shows 8,100 tons held by the Fed on behalf of the Treasury. So, yeah, we're backed by gold. And then what happens if China says, well, we're not going to take your currency unless we can see the gold? And that, to me, therein lies the problem.
Or even settle in gold. You're right. Yeah.
Yeah. And so, and maybe the U.S. is addressing that with, the enormous amount of flow of gold into the COMEX, as you point out, the mystery customer.
Gold is held on every central bank balance sheet, ironically enough, in what's called the gold revaluation account. And there's been a lot of talk about gold revaluation. I even asked Judy Shelton that, and the head of the Dutch National Bank is screaming for it. You mentioned the Bundesbank, Germany. They have many of the members of their committee that are advocating for gold revaluation. Senator Loomis from Wyoming, gold revaluation, revalue the gold held in the gold revaluation account. Maybe there are big things behind the scenes in gold. As you know, I was a little bit late to our meeting today, so out of respect for your time, last question, and I really do appreciate it. I mean, you're someone I'd like to drink a bottle of scotch with and really talk about life, because you and I see things in a very similar way, but you're a straight shooter. I know you like to play tennis. Unfortunately, you don't play golf, or that would be on the list too. 4 hours and a couple of beers, you get to know someone real well. But I do appreciate you coming on very much today, Dave. Last question for you. With everything happening right now, and you kind of alluded to it in your last answer, talking about a reset, do you think we're heading towards a breaking point or maybe a turning point? The difference being one being a reset and the other maybe being getting our house in order. And during all of this, let's focus, because you and I probably are accused of being doom and gloomers, or maybe we're just realistic. Again, fine line between pessimism and realism, just like there's a fine line between reality and conspiracy. So during all of this, what gives you hope when you look at a bigger picture? You got nothing?
I mean, there's a couple different components to transitioning to a gold-backed currency system, right? And part of it is just the logistics of the transition and backing the gold and accountability and all that stuff, the accountability. The other problem that's the white elephant in the room that needs to be addressed is the debt problem. And right now, the U.S. Treasury debt load is essentially existential. The Treasury market is gonna blow up badly at some point. And if you watch the fund flows every month, foreigners for the most part are taking their money out of treasuries, and they're not. They, like with China, they used to take some out and then they buy some. Now I think I saw yesterday they're down to under 800 billion in treasury holdings. I mean, at their peak, I think they held as much as, I want to say, 1.5 trillion.
And just as an aside, 6 trillion in treasuries come due later this month or next month. And 6 trillion.
And the sense out there talking about, oh, well, maybe we'll buy back treasuries to help control yield at the long end. Well, with what money? You're running a deficit, a spending deficit at an annualized rate of over $2 trillion. So what are you going to do? Issue a bunch of T-bills and buy, 10-year treasuries to try and get the long end of the curve lower? I mean, that's nuts. And it's the treasury debt is the worst, but corporate debt that's also, in bad shape. The amount of debt outstanding, especially when you look at commercial real estate and a lot of the debt that was issued by private equity buyouts, a lot of that debt sitting on bank balance sheets like at JP Morgan's, and it's a ticking time bomb. And then obviously consumer debt, consumer credit card debt outstanding is like at an all-time high. And people are using credit cards to make ends meet month to month. So, if you're going to have a true financial reset, you got to address the debt problem. And on top of that, you have to address the off-balance sheet derivatives problem, which takes the debt problem and magnifies it by 20. And
so I take it you think we're heading towards a breaking point rather than a turning point.
I try to be optimistic. I'm 62. I don't have a lot left on my timeline. So I'm optimistic that I can make it to my grave without feeling the pain that's going to be associated with when everything starts to collapse for real and Fed money printing and central bank money printing can't kick that can down the road. And I think for China, it's not as big a problem, even though they've got a lot of debt outstanding, their currency is weak, blah, blah, blah. But they also have a huge amount of gold, a much bigger amount of gold than they publicly acknowledge. And to me, that's always been their trump card and their hedge.
Well, Dave, I appreciate it, brother. I think, I'd rather, like I say all the time, you can't get out of the way of what you don't see coming. And I appreciate your candor. And I kind of liken it to the Shawshank Redemption, where Andy Dufresne had to crawl through 2 miles of shit to get to the other side. So maybe there is reason to be optimistic, but not till we crawl through the tubble of shit, and the 2 miles of it. But you're one of the good guys and someone that I followed for a long time, and I greatly appreciate you coming on today. What's the best way for people to follow you, to check out your writing? This is the time to be following someone who's an expert in the mining share space. What's the best way for people to check out what you're doing?
Sure. My website that kind of hosts the links to my subscriptions is investmentresearchdynamics.com, and there's 2 links at the top that explain what is involved with each newsletter. And then I also have a Substack, just simply called the Mining Stock Journal. And a lot of the content is excerpts from my newsletters. So you can get a taste of what the newsletters look like there. And you can also subscribe to the Mining Stock Journal anyway through the Substack.
Right on. And I'm one of the old guys that prefers to read rather than, I know we're doing a video here, but all the prep work I ever do is reading. And I, for one, appreciate the effort and know how hard it is to do what you're doing. And keep doing it, Dave. Keep doing it. It's our time. And there are a lot of people who need to hear what you have to say and what all of us in this industry have to say. And thank you for jumping in and sharing your wisdom and your candor. I would like to do it again with you down the road. You're 62, like you said, you're still young, man. That kind of bummed me out when I heard that. You ain't got a lot of time left. I'm only 54, so shit, you got a lot of time left, man. And but hey, thanks for being here, and I look forward to picking up with you where we left off. But hope you enjoy the rest of your day, and I look forward to chatting with you again real soon.
Likewise, Andy, and thanks for having me on again. This has been great.
Got it, brother. Talk soon.
Little by Little with Andy Schectman.